Photos here. This video talk about ARA Logos Logistics Trust listed in the Singapore Exchange. I bought this stock is last month. This company just finished the extraordinary general meeting to resolve acquiring a new property in the Australia. So gearing high, new unit issue. So this is a good time to review this stock. So my question is two questions: higher gearing on the new unit issuances, any impact on the share performance and distribution? The second is a growth strategy on track. So this company, ARA Logistics Trust, is a real estate investment trust that involved in the quality income producing industrial real estate use for the logistic purposes. Existing asset is 10 in Singapore is about 873 million. Australia 17 existing asset. That if this time the combined the 10 new acquisition is a 785 million. So basically half and half geo diversification properties this REIT has. Why I bought this stock is last month. First is as a fire investors is I prefer a stable, consistent, recurring income. Bond is not attractive now under the low interest ratio. So under Singapore data space, so where I can invest more than I get the 6% dividend. Then the uncertainty here is a COVID-19. So my pick is a infra, logistic, and DC REIT. Then the pick up this one. Especially I like this Australia growth expansion plan after acquiring the Australia logistic professional Logos. Then this stock is going down for a long time. I hope this turn around is maybe capital gain opportunities there, and the other analysis is aligned with this kind of concept. Then the Q3 earnings is good. So dividend yield is the first half of this year is quite amazing. So shareholders can expect this one is now is a turnaround, the realistic one. Of course, is a new turnaround through the new acquisition is increase the gearing. But I think with having a Logos IRA is a strong background company. Is I think funding may basically no problem. Also new issuance is already happens November 2. That's why I already digested. That's why I bought. Then the growth strategy first is so this one March is they complete acquisition of the Logos. After that is they actually executed and delivered the result is Australia property acquisition is finished this year. That's a great job, my view. So share prices went down. This is 2014 is a gradually down like that. Is a hope this gonna turn around in this way. The dividend is quite stable. 2014 to now is lowest is 6.82% annual. Is 2017 is the highest is 9.68 is the first half of this year. So constantly the 7.986 7.89 is very consistent. Is but this is a usual. So sometime happen is this share performance went down. Even if the dividend is a nice dividend is a flat, but as investors is at least is a share performance is stable, then dividend is stable. So hope this kind of growth strategy even bring me more growth capital gain on this investment. So first question is a high gearing and the new unit issuances impact on the share price performance distribution. November 2, they announced a 50 million new issuances with a 55.25% per unit. Is this increase 8% of the total share? And the stock price is reacted after the announcement with the 55.25 is for the existing unit holders is 2 cents, but it went back quickly. So shareholders supported these issuances. Then the 23rd of December is this one surprising to me is another a preferential offer a new issue announced is 50 million, same kind of amount. Then this one twice is a method of the funding is basically the from the equity side is two new issuances, one and the external bank borrowings this one 246 million. So try to reduce the this gearing part is rely on the maybe equity side. Gearing one is already 40% at the end of the Q3. At the time that they expect a gearing up to the 42.9%. Then when I announced the second new issuances, is the stock price is a little down. Is that because it's not a price for the new unit decided is it will be decided I think January 4th on this is so probably another 8% of the total share increase, which means the existing shareholders value is diluted in that way. This so this question is actually the basically this slide answer my question is this slide came from the extraordinary general meeting. Is the first half a distribution per unit pro forma basis is 2.258 cents for the first half, mean an annual basis is 2.258 multiplied by 2. Then the eyeball is 58 cents, which means 7.8% yield dividend is expected. So still only the 2.8% down is even if they issue maybe 16 or 17% increase a total number of share, but basically the this 7.8% expected. And the gearing one is as they reported is increase to the 42.9%. So this align with their announcement before. So that's why is my view is this is on track, is within my expectation. Is my first question is okay. And move to the next question is can we really rely on their growth story? Otherwise their stock is going down as like before. This Australia asset acquisition good or not is so their slide actually gave us answers. Yeah, good thing is a total asset increase value is 28.2%. Hope is a DPU increase 28.2% as well. And also good one is as an investment perspective, the diversification more as a geo basis is quite nice. And also logistic market perspective is so their logistic demand is up good, and also vacancy ratio in the Australian market remains lower. That's what the current status. And most important maybe for this company is a gearing high is but the interest ratio is historically low. Even if the Australia RBA started the quantitative easing, that's a good news. So which means is we can so expected a low interest ratio cost on this, borrowing cost on this. The second is this one is an investment is a transport infrastructure project in the Australia is a lot. This one is 2020 here it's went up. More transport infrastructure available is a more logistic demand is up. So from that perspective is a macro perspective the market size is growing. The second is expansion of the growth of the e-commerce, and also cold storage facilities demand is robust in the Australia. It's a 2021 here, 2020 here, and this orange line is a growth expected, and here the 2020 is a cold storage is also expected. So my view is a growth strategy. At least is a Australia one. They deliver is on track, and Australia market, this logistic market is I think looks good. Is so that's why the second question is also clear. So my decision is a hold as long as a low interest ratio involved. Continue add more if earning under its 2020 outlook good. So 2020 earning come soon. Is hope is I can add more on this. Thank you for watching today's video, and a good deal on the good day.